Hello everybody, welcome to Tuesday. The S&P 500 was up 1.05% today, which was great. Technology and our targeted indexes in many cases led the way and did even better, which is good for us. And I think, again, I want to reemphasize the fact that there really isn't any place else to go. We've seen technology and advanced healthcare outperform the overall market pretty steadily since the recovery back in March. We have had a poor month in September, but really there's nowhere to go with the money. We're not seeing it move into these reopening stocks, and we're really locked into where you can put the money. If you go to the bank, they don't pay anything. If you buy bonds, that's not paying much. And you want to buy some of these other stocks that are beat down, the airlines and all those things. They're still struggling, and with no stimulus package, they're going to continue to struggle actually until there's a vaccine or a cure. And so that really doesn't leave a lot of places to go. Homes are doing well, and so that's an area that money is definitely going to be going to. And then, technology and advanced healthcare are two of the segments that are doing very, very well. A couple other segments doing decently also, but it's really kind of narrow. It's just the way it is. And so even when that sells off, what I'm watching for is a rotation. Are they moving over to these other stocks? And the answer is no, not that I can see. And so I do think it has to come back at some point in time, and we're seeing that. We saw some last week, we're seeing some this week. Slowly but surely people are coming in. Apple might drop a bunch, but then people start to buy it again. And I think that's really powerful. Just one comment. I had a client talk to me about, why do we put up with all this madness in the market? Why don't they just put it someplace and, and try to get by? Well, if you go back to, say, 2000, the beginning of 2000, and let's say you needed $50,000 a year to live off of, according to Smart Asset, their inflation calculator, you need about $76,000 to buy those same things today. So that's a big difference. And that's not that long ago, 20 years. If I take that same $50,000 and I put it into the Vanguard S&P 500 mutual fund on January 2000, that's now worth about $163,000. That's a big difference. And so, and this is a terrible time frame to invest. January 2000 was right before the big dot-com crash. Then we just barely got back to, and then we had the 2008 crash, and then we had this huge run up, and then we had a pandemic. And even then, the S&P 500 turned 50,000 into 163,000. So I do think it's important to focus on some of the long term, because you're going to need that here in the short term to get through this kind of volatility that we're going to have because of the stimulus package and the presidential election period. So hang in there. I think we'll be okay. I will look forward to seeing what's going to happen tomorrow, and I'll talk to you then. Thank you very much.